May profits be upon you. Welcome to another weekly market forecast. Thank you for tuning in. Thank you to my subscribers that tune in every weekend when I put these videos out. I appreciate you. Hey, if you're new to the channel, make sure you leave a like or a boost to this video and subscribe to the channel so that you can catch my notifications for new videos and updates that I like to release during the week. Okay, now this past week, we hit a lot of the targets that I set out in the last weekend's videos for the past week. Yes, pretty good, pretty doggone good analysis. Now, things got different. Things changed up a little bit on Friday because of the new tensions in the Middle East. Israel attacked Iran with some missiles and hit some military and targets to include nuclear sites, uh, uh, and you know it's just a terrible situation, and Iran is retaliated and retaliating, which I think will lead to a gap opening uh, come Sunday evening. You'll see a gap opening, I think. Uh, but uh, that is turning things around. The US dollar is gaining strength against its counterparts, and that means people are becoming more risk adverse and they're running to safe havens. When tensions rise and missiles start flying, the US dollar starts to gain strength against its counterparts, and the equity markets start to lose those investors who are taking their money out of the riskier assets and putting them in safe havens. So uh, we'll see that reflected, I think, this week, as long as that situation in the Middle East remains. If it remains unchanged, we're going to start to see a slide in the equities. Look, this is the economic calendar for next week. We have the Japanese yen going to have a interest rate decision on Monday. We have a decent Tuesday, with some core retail sales and all. And then on Wednesday is the big one. We have the FOMC for the US dollar. All right. We have CPI for the pound. And but that FOMC, that's going to be that's going to be a big one because it has the potential to reverse the markets. All right. Make sure you tune in a half an hour later for that FOMC press conference, because those statements that come out of that tend to move move the market in the opposite direction of the interest rate decision. All right. Or when it's a lame kind of, like a meh kind of reaction from the markets from the interest rate decision, you'll see the market start to move after the press conference. All right. Thursday, good. The Swiss, they have an interest rate decision, and you'll see that the U.S. dollar the U.S. side has a bank holiday, so that could leave markets in a narrowing range. You want to be careful when you're trading in those kind of environments. And then Friday we have some more Bank of Japan. The governor speaks, and then the retail sales. So that's it for the upcoming week. Now, as far as the S&P, we're looking at the weekly time frame right now. You can see, as of the last 1, 2, 3, 4, 5 candles, there is no uh, bullish fair value gaps or bearish fair value gaps. All right. What are we doing though? We are disrespecting. Let me use this one. We are disrespecting a bearish fair value gap. We went right through it. That's a very bullish indication, and we had some bullish momentum being building up. We would get going higher and higher with the lows going higher and higher until Friday, and then the missiles started flying, and that brought uh, a retracement. That started a retracement, which I think will probably see some follow through come Monday. Come the next open, and probably, like I said, it'll probably gap because Israel attacked and Israel, and then Iran has to retaliate, right? Well, they did retaliate, and that was after market close. So that makes me think we're going to see a gap open to the downside. All right, you can see how Friday's news came in and how it affected the market. It brought the market all the way down. Boom, an impulsive move, and then we had the retracement. I believe we're going to see more downside come uh, the open come next week. And where would our targets be? The first target, I want to mention, we did hit this target here, right? I had mentioned that I thought that the markets would probably let's not even go over it. What we see is that climb up until this high. What I said, I mentioned that this would be the draw on liquidity, more than not just last week, but the week before. I thought this would be a draw on liquidity back when prices were here, and we made our way all the way up to it, to the middle of it. But now with the new tensions, we'll probably be heading back for a retracement of some kind. We already took this low. All right, I believe this these lows will be the target next week. Boom, here, and come on, and here, this swing low. All right, we're just going to keep an eye on those next week, because right here is where there was a nice bounce. This is a demand zone, right? You can see the sell before the stronger buy. Price came back to it, and we sprung right up from that. A break and close below this low, that low. When you get a break and close of below those things, what you're doing is confirming bearishness, and you wait for that pullback, and that'll be a high probability trade to take lower to that low. If we reach that and we see a close on a break, close on a body of a candle body close here, you know that there's a good chance we're going to head down lower to this, and possibly to fill that volume imbalance here, that price gap right there. So yeah, I am bearish in this market for sure. All right. And if we look at, let me see this, if I can get this out of here. Thank you. I don't want to ugly up my chart. If we go down to the four, 4 hour, you can see how bearish the day ended on Friday, right? The last 4 hours, we're in a bullish fair value gap here. But do I think it's going to hold? No, I think that we had that impulsive move, we had the pullback, and I believe we're going to see the follow through right now, down to this low and down to this low. Yeah, that's it. That's it. I think this will confirm. This is why I'm bringing you here. I believe the breaking of that 4 hour fair value gap, a close below that, will confirm the bearishness in this market. We'll wait for a pullback from there, and we can take a high probability trade to the downside. Okay. If we go to the NASDAQ, uh, on the weekly, you can see again, there's no bullish fair value gaps, no bearish fair value gaps, just price climbing until Friday. And then we got this mess. All right. Uh, uh, you can see on Friday's candle, closed bearishly. Yeah, I got to get rid of this. It's driving me nuts. All right. Very similar to the S&P. All right. Came back and these swept these lows here for sell side liquidity. We see the pullback. I'm thinking we're going to see even more downside because of the tensions in the Middle East. And here's my target for next week. And if we hit that target and we get a close below, uh, on a daily basis, we get a close below that candle, below that candle low, I think we're coming here. All right. And I think that there's a volume imbalance, just like on the S&P, I think there's a good chance we'll make it all the way down there. This is nothing but sell side liquidity for the market to come and get. So we'll see how it goes. All right. If we go to the 4 hour, you can see how we had that impulsive move. We had the pullback, and you see our price closed the day with a bearish 4 hour candle. All right. Yeah, you can say that price came into this large 4 hour price, this imbalance here, and started to turn over. Yeah, I think that's exactly what's going to happen. We're probably going to be seeing some lower prices here. All right, so we have targets. We have targets, and a close below any of them. All right, a close below any of them will signal that there's probably more bearishness to come. Okay, so this will be the first target, of course. Let me get out of here. Let me get that out of there. Come on, man. Don't take all day to do this. Come on, you doing this on purpose, man. All right. So let me get one more in there. This low. All right. This will be the first. That'll be the first target. And then we have these further targets. All right. But these first two, those are the ones I expect to get tapped next week. All right. There's no reason to take a bullet, anything in the way of buys until the tensions are calm, until there's a ceasefire, until that there is talk of there will be no more retaliations or whatever. That's when you start to think the investors will come back into the market and start putting back on some risk. Okay. In the Dow is following basically the same way. All right. You see, it's been bullish. And then last week it closed very bearish. It just seems to be a little bit more sensitive because that bearish candle had a very strong close, stronger than the S&P and the NASDAQ. All right. I'm looking for price to pull back into this institutional candle there. All right. I think this will probably end up being a change in the state of delivery. And we can see price pull back into it and then down further. I'm looking at these marks as the targets for sell side liquidity come next week. Okay. Yeah, so that's a very strong close to the downside. I think this is going to be a strong draw on liquidity here. And then once we get a close below that target, we'll look for price to pull back, and then we can target this one. Yeah, yeah. All right. I don't think we're going to get a bounce here from this area of the sell to this stronger buy because it's already been traded into. It's the low that I'm more concerned with at this point. Okay. Gold. Gold is just going to fly. All right. Look at the response on Friday. You think you're not going to see more of that? As long as this thing between Israel and Iran is going on, it's going to go higher, period. End of story. I'm thinking that there is a chance that we come back for the highs. Yeah, there's a good chance that we're going to come back for the highs as long as these missiles are flying. There is no doubt about that. We have a bullish fair value gap right under there, a daily bullish fair value gap. Let me get rid of that. That was last week's trading. Sorry. All right. So is there a chance that price pulls back into this? Yeah, there's a slight chance, but I don't think normally I would, but this is we got conflict going on. Bullets are flying. I mean, missiles are flying. So I'm thinking that we come back, maybe we pull back, and then it's going to come back in there. I think we're going to leave a fair value gap in here. Sorry. All right. Let me get a little closer on that. I think we're going to see a fair value gap form right in here. All right. And price is going to probably tap into that to go higher. For I think that's going to happen as long as this tension is ratcheting up. All right. And the U.S. is not able to calm it down. Oh, boy. They're not listening. Israel is on its own mission. They want to escalate things with the Gaza situation, with Hamas. They want to just annihilate everything. I mean, and then they want to shoot at Israel. I mean, Iran during the middle of the peace, some kind of deal with the U.S. while to not go the nuclear weapon route. It's just it's crazy timing. All right, so I'm looking for gold. I'm looking for gold to continue higher. That's all there is to it. I think we're going to gap open. I think we're going to gap open in the equities, and I think that's going to do nothing but leave a fair value gap for price to go higher. Yeah, yeah, yeah. Let me go down to silver. Silver bullish. I'm looking for the same bullishness in this, and you can see on the daily that we didn't have that. It wasn't as excitable. All right, Thursday it came down to it tapped into the bullish fair value gap here, and kind of went and just so opened a indecisive candle, even with all the bullets flying and everything. If I'm going to take a buy in the middle, I'm going to take one in gold before I do silver. All right. So, yeah, I expect prices to get a little higher for silver, but I'm going to be concentrating on gold myself. All right. I don't have uh, higher targets as just yet, uh, but because we're in this what do you call this fair value gap here, I think that there's a chance. You see the reaction on Friday. I think there's a chance we may consolidate here a little bit before making a move higher. I do think that it is going to go higher, but uh, I don't think we're going to see that impulsive move because we didn't see it Thursday, Friday. So that's all my thoughts are on that. Now, if we go to oil, when the missiles flying, oil gets higher. All right, oil gets higher because tensions mean that oil may be hard to get, and if oil is hard to get, the oil that is gettable is going to the prices increase. All right, so we can see this big impulsive move up. We can look at it on a weekly, and we see that how this candle just shot up. I mean, what are we supposed to do here? Uh, are we supposed to think, well, maybe we can take shorts from up here? No, that's exactly what we don't do until that the problems and the tensions are settled in some kind of way, a ceasefire of some kind of agreement between Israel and Iran. Uh, Prices are going to go higher, and I believe this trend line here is going to be trend line liquidity. You understand? Relative equal highs. And I believe that's exactly where we're going. I believe that we are going up to take that high and quite possibly to that high. All right. I do believe that prices are going to shoot up. Look at how they reacted on Friday. You don't think we're going to see more of this? This is an impulsive move. We pull back and then we go up higher. That's all there is to it. All right. So I'm looking at this high at 77.62, and I'm looking at this high here at 84.29. Okay. Does that make sense? Thank you for watching. I'll see you in the next video, and trade carefully.